Hello and welcome to part 4 of how to make easy money on Fidelity. So we have talked about mutual funds and ETFs, and now we're going to get into the nitty-gritty good stuff of stocks and how to actually find stocks, which is I know what everybody wants to dive into. So in the very first video, we talked about going through stocks, ETFs, and mutual funds. There are other vehicles or ways to invest. Okay, but if you're starting out and you want to keep this easy and simple, guys, really these are your three that you want to stick with. We've got the stocks ETFs, and when we click on this page, like before, there is a little secret. You go down to this today's events, upgrades, downgrades, and that is going to pull up a new tab to the upgrades, downgrades window. Now, if you see, this is really just pertains to stocks. This is really where it all starts. So make sure you have this bookmarked, because the cornerstone of this whole thing is to realize that there are a lot of other people out there that have accounting degrees, finance degrees, that work for major research firms, and their full-time job is to go over balance sheets and price to earning statements and all the things that, you know, literally is really boring to a majority of people. So take advantage of the work that they have done. At least it's a place to start. Okay, because there are thousands of investment opportunities out there. So the object is to get this whittled down on how do we actually find a good stock. So we're going to go ahead and start here, and let's talk about what actually finding a good investment is all about. I've used the word investments because these 5 golden rules will apply to ETFs, mutual funds, and stocks for the most part. But to kick it off, what's really the very first question? Is this something people want, or is it something they need? You can invest all your money into a scented candle shop, but is that really something people need to survive, or is it really more of a want? So if we go back and look at our sector types, all stocks and all investments are really broken down into these categories. Most of these are pretty self-explanatory. Healthcare, information technology, real estate. So you can group into a certain sector of the thing that's being sold. Sometimes it's a physical thing you can hold, sometimes it's not, like a piece of software or something like that. So immediately I'm going to analyze and go, well, okay, it's the 21st century. Can people really live without a computer? You wouldn't be watching this right now without it, right? So I'm going to go ahead and uncheck all these boxes and filter and narrow down my search and only look, for now, just at IT companies. Because let's be honest, microchips aren't going away, computers aren't going away. There's no way as a society we can roll back and imagine trying to function without the internet. Long time ago, when you did want to trade stocks, you had to open up this thing called a newspaper with printed words on it, and actually it looked like a map. But anyways, so that's really the major thing, is that you really want to invest into things that people absolutely need to survive. Energy, oil, gas, technology. These are core things that just, regardless of what's going to happen, they're not going to go and disappear. So what else have we got on the list? What do I specifically know about the sector? Now, this is going to be different for everybody, but me personally, I've worked in the IT field for 20 plus years, all different kinds of aspects of it. So when I start looking at companies in this specific sector, there are certain ones that pop out to me just because of experience. Broadcom, for example, is a major manufacturer of microchips, and they have been for a very long time. They're not going anywhere. I do not have a background in healthcare. I really don't know much about this. So I'm going to be going in blind. I'm going to stick with what my personal strengths are. If you were a real estate agent, okay, if you were involved in communication services, you used to work in the telecom industry, there's this broader than that. But try to focus in on something you at least might have a little bit more familiarity with. That might not be possible, and that's okay. Just revert back to the first golden rule: stick with what people really need and not a want. So this next one: what real world factors can influence this investment? What can happen in the world that's outside of your control that can make these things go up or down? Now, there's one I'm going to pick on big time, and that's going to be healthcare. specifically pharmaceuticals, drugs, anything like that, anything relying on the FDA's approval or governmental approval. This is where you're going to see stocks go from 32 cents to $20 overnight. That is a crazy amount of validity, and frankly, I just stay away from it. So there are always going to be things in the world that are going to affect the market. The stock market is a very temperamental, emotionally reactive teenager, and the smallest tiny little news can just literally crush things. So it's the ocean. Waves go up, waves go down. The very next day, this will just completely turn around. So what is really affecting what world events are going to affect the sectors that you're in? Some world events are going to affect all sectors. Doesn't matter. Big things like, well, a pandemic, a war, and it's always going to end up happening. But you want to try to find things that are bulletproof that aren't going to be influenced by a higher number of things. Now, does the price of the investment align with my investment goals? This is important because when you start looking at actual particular prices, we'll take a look at this guy right here, XTI Aerospace. Now, this is a stock that's $1.43. You want to start looking at these things that you can buy into, not by dollar amounts, but by percentages. The percentages is the most important part. Making 10% can mean a world of difference if you're talking about a $100 investment or a $1,000 investment. Okay, so how much money, how many pennies, how many cents does this need to go up to get a gain that is worth it? Okay, so you want to try to find a stock that isn't too cheap because the risk is so high, but you also don't want to find a stock that's too expensive. Now, this one, $87. So in order to make a decent amount of change on this is if this went from $88 to $90, that's a pretty small percentage gain. You can do the math on that, but it's pretty basic. So I would kind of refer to this as finding the right size fish. You don't want to find something too small, but you also don't want to get into something that's $300-$400 a share. Now, if you do, that's okay, but that's going to be more of a long-term investment. And and that's fine. That's absolutely fine. It just depends on what it is you're trying to do. If I'm trying to make money easily and quickly, I'm going to avoid buying stocks that are going to be exorbitantly priced because it's going to take a lot more for that price increase to go up for me to see a percentage gain that I find worth it. And then finally, probably the most important thing in the tip of this whole spear is what are the current analyst upgrades saying? And this is where this screen that we go back to is so crucially important. I'm going to go ahead and uncheck these three boxes up here. And I just want to look at upgrades in the information technology sector for the past week. Now I have a list that's been compiled. So we've got something to work with here. Technically 111 of them. All right. And right here, you got the name of the company and then the research firm. These are the analysts. These are the research firms. These are companies that their only mission is to dig into all the boring stuff you don't want to look at. And you see some that you're going to be familiar with, like Raymond James. You'll see the Zacks Investment Research a lot, Trading Central. So what we're looking for is any of these companies, any of these analysts that said, hey, we're going to upgrade this to buy or outperform. These are good things. So we're going to be like, all right, well, there's already some traction going here with this. Let's just take a look at AMD. This is a big one that a lot of people are familiar with, or I should say Intel's competitor to making microchips. So I'm going to go back to Yahoo just for the simplicity of this. Type in the symbol AMD. We'll type this in. We'll go ahead and type this in, and then we got our chart. Now, this is our one-day view. Let's look at 1 month. And what we see here are these orange dots on the chart here. This is what I'm looking for. If you just hover over this, you can see right here, analyst rating, Barclays, and the price action has been raised from a price target of $200 a share to $300 a share. Now, this came out October 6th, which is less than a week ago. So you got Jefferies, price target goes from 170 to 300. So there's another firm that's saying, hey, we think this is going to go to 300. And now we got another one here, Goldman and Sachs. And theirs is a little different. They're saying previously we said it was 150, but we think it's going to go to 210. And that came out October 8th. So it's already at 214, and that was at close on October 10th. Let's go back another 6 months. Wow, we've got a lot more dots over here. So now I'm playing the game of let's go back in time and say, well, okay, back in June, what was going on? Who was the firm saying what it's going to do? We can go back and analyze that, look at it, and say, were they right? Time will always tell. And with this, you can start to build a compilation of analyst firms or research firms that are your favorite. Fidelity itself does have a research firm scorecard, which they basically are looking at how many times have these people been right. So this is also a wonderful investment. This is all on Fidelity, and it's something a lot of people just don't know about. According to them, this Ford equity research company over here is pretty much one of the top dogs, and you can see their scorecards. You click on research firms over here, and it gives you the entire list. Now, I can't say who's better, who's not, the ones to avoid, the ones that are scammers, the ones that are just full of it, but there are ones out there. So you doing your research and checking out and seeing, hey, which one of these guys seem to have a bit more reputability? And Fidelity is a great place to start because they're not going to recommend these guys if they're no good. Because if it hurts you, it's going to hurt Fidelity. We're all in it together. We're going to dig into this so much more. We're going to go through and actually, when the market is open, go through and in live time actually find some decent stocks. Thanks and stay tuned.